Risk is something that we're very conscious of at Cromwell, and obviously risk is a large part of property investment, unlike term deposits and other products like that. So risk is both upfront, so what are we getting into, what are we buying, what do we need to manage, but also through the whole life of the investment product we are looking at risk, and then changing how we're managing it to mitigate any risks that are coming up or try and manage that risk profile. So what we tend to do is upfront, our acquisition process typically lasts up to about 3 months, depending on how complex the deal is. We have an upfront assessment and underwriting, then we do a detailed due diligence piece, which the aim is to identify the risks. So it covers legal, tax, commercial risks, technical risks of the building, so that we understand what we're getting, and that we use that information that comes out of it, which is both done internally and externally with specialist consultants, in order to determine what the cash flow impact, to what we said earlier, will be on the building, and what we have to manage and what we need to be aware of, but also in the next 5 years, potentially the next 10 years. Those risks all then go into the overall underwriting pack, which goes to the board for another set of eyes and approval. And then once we bought it, managing that risk. So we have an internal management approach in Cromwell. So every asset has its own property manager, facility manager, and leasing. So we understand exactly what is going on within our buildings rather than outsourcing that, which allows us to manage that risk better.